Hey, how you doing? And welcome to Livewire's Buy, Hold, Sell. I'm Selby, and today we're going to be analysing 5 companies with exceptional earnings growth. To do that, we're joined by Jinbei Liu from Tribeca and Daniel Moore from IML. Okay, first up today we have REA Group, which is expected to grow its earnings per share by 28.46% over the coming year. Jinbei, I'm going to start with you. Is it a buy, hold, or sell?
Look, REA is a buy. It's an incredible business. I think the listings just turned the corner and it's looking very positive. And usually it's a good lead indicator for where the earnings going. And then the pricing power is very strong and the operating leverage is coming through as well. It's a buy.
Okay, its share price has rebounded around 37% over the past 12 months. It's trading on a forward PE of around 54 times, quite expensive. Most brokers rate the stock a hold. Daniel, over to you. Is it a buy, hold, or sell?
I'd love to say something better, but for me it's a sell. Just love the business, but the valuation is just too high for me, particularly given where interest rates are today. It's trading at similar levels to where it was when rates were 1%. So too expensive for me.
Okay, next up today we have Goodman Group. It's expected to grow its earnings per share by 28.75% over the next 12 months. Daniel, staying with you, is it a buy, hold, or sell?
Sell again for me. It's up 70% since November on the back of the data center theme. You know, they've got some land they can use for development for data centers, trading on around 30 times, which is really rich for primarily a development business. They'll make some really good returns from those data center developments today or over the next couple of years, but then they're going to have to restock that land bank at sort of market values where everyone's chasing land to build development centers. Most
brokers actually disagree with you. It's rated as a strong buy. Jinbei, over to you. Do you agree? Is it a buy, hold, or sell?
Look, it's a buy. I love this show that we all have very different opinion. That's what makes it the market. I think this company, not only it's the best property company here in Australia and globally, it's dominated its industrial property space and track record for the management is incredibly strong. And now they just unveiled their exposure to the data center. And right now, in analyst forecast, is really just assuming some form of, the build and then sell it off to the hyperscaler or sell it off to the likes of, other data center operators. But there's every opportunity for this company to start thinking about perhaps they can turn those into turnkey operation, which is they can turn into like a next DC if they wanted to. Now, the hyperscalers like the Amazon, like the Microsoft, they do require a lot of space and they're trying to secure those space from Goodman Group and from others for many decades to come. So, incredible amount of demand. It will underpin significant amount of growth for this company and it's not in analyst numbers.
Okay, last up today we have ASX growth darling CSL. It's expected to grow its earnings per share by 30.81% over the next year. Jinbei, over to you. Is it a buy, hold, or sell?
Look, CSL is a hold for me at this point. I do think the earnings will grow for the next 12 months because it has come from a very, very low suppressed stage in the last 12 months ago. So everything's trending well for the next 12 months. However, structurally, I do think CSL is facing a bit of a challenge, so say 2-3 years out, because they don't have the next product to drive that continued structural growth. So for me, it's harder to make it stack up as a strong buy. It's a hold for me.
Okay, its share price hasn't done quite that well over the past 12 months. It's down around 10%. It's trading on a forward PE of around 31 times. It's rated as a buy among the brokers. Daniel, last one for you today. Is it a buy, hold, or sell?
Yeah, it's a buy for me. We actually just caught up with them at the Macquarie conference recently. The next 3 to 5 years outlook is really strong. We're talking sort of double-digit earnings growth for the next 3 to 5 years. Market leader in its field. No, it's a business we really like.
Okay, we asked our guests to bring along one stock that they believe has powerful earnings potential today. Daniel, what have you brought for us?
So the company I've got is the Lottery Corp. Powerful earnings might be a little bit of a stretch. I'd say it's really consistent earnings growth, which they've delivered over many, many years. What drives their growth is they've got unregulated pricing. So there are a lot of flexibility on their pricing each year. With their licenses, they can redesign games and create new games. They just created a new lottery only a few weeks ago. And then their online sales, as they grow, their margins improve over time because they don't have to pay commissions to newsagents. So, pretty good growth, probably around 7% per annum, but through the cycle.
Okay, over to you, Jinbei. What stock do you think has exceptional earnings growth on the ASX?
Look, I think this one hasn't been talked about all that much, but it is the highest quality. It's technology one. This little business has really grown from homegrown Australia now into international, and it has delivered double-digit return year in, year out, and it's expected to continue to do so, and at a slightly higher rate as well. Management has proven to have this huge execution track record. We'll back this company any day.
Okay, well, I hope you enjoyed that episode as much as I did. If you did, why not give it a like? Remember to subscribe to our YouTube channel. We're adding so much great content just like this every single week.